I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone gliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market strength continued overall last week as earnings were better than expected. Market also was helped by Biden's spending plan and the Fed printing to infinity. Early part of the week saw the market standing still, waiting for big news coming out on Wednesday. And this week did see 180 stocks in the S&P 500 reporting their earnings, but that would not move the markets very much. In fact, 87% of the stocks in the S&P 500 that have reported so far have beaten their earnings reports. Well, that either says that analysts don't know what's going on, or everything is being understated so that it looks like it's better. Monday, the news was Bitcoin was up over $4,000 as JP Morgan said they're going to launch a fund. And Tesla, well, they came out. Of course, they are big holders of Bitcoin, and they reported a big beat for their earnings, that is on top line, but the stock market didn't like the news, and the stock did get hit. If you look deeper into those Tesla earnings, they sold energy credits for many billions of millions of dollars, and they had a big profit in Bitcoin. And what happened was that when you take out all those numbers, they have actually lost money selling cars. So they are in the electric car business, and that's probably where they're going to get their earnings from in the future, and they don't make any money at it. So Tesla really reversed to the downside. It had hit some resistance on our analysis, and counter to Cathie Woods and ARK, who was looking for $3,000 in Tesla, we're looking for $500 or lower. Tuesday, the market was dead, waiting for the Fed news, and it did move down early on news that home prices had spiked year over year to the upside by 12%. No inflation? Of course, add to that soybeans. I've got Bitcoin on the brain. Soybeans traded over $16, which was our anticipated price target. And again, we say, no inflation? Is it really transitory? Food prices and housing prices are soaring. If you look at lumber, those prices have just gone absolutely ballistic, and that's part of what's being passed on to home prices. And of course, with low interest rates out there, people are scrambling in a low inventory environment for housing to buy it. We do have inflation, no matter what Powell says. Wednesday, there was tons of news. There was a couple of big wiggles in the market, and overall, another small change day. The FOMC did come out and said, well, no change again, and no taper until sometime in 2020. Powell did say that the market did look frothy, but he takes really no ownership in that. It has anything to do with the Fed. Of course, if the Fed wasn't supplying massive amount of money out there, where would the markets be? Biden, well, he had his semi-annual report in front of Congress, and now the amount of money that he plans to spend over this next decade is up over $6 trillion. Take that along with tax increases on the wealthy, and we have a massive increase of the nanny state going on. It's amazing that only Joe Manchin, a Democrat, stands in the way of this madness of the U.S. moving deeper to a social democracy. Earnings in Facebook came out and Apple, and they were huge beats after the close. Now Facebook did okay, and that lifted the markets pre-market on Thursday, but Apple ended up not being able to hold those gains. Thursday, the news that came out was Q1 GDP advanced at an annual rate of 6.4%. That's about what they were looking for in this big rebounding economy after the COVID-19 debacle. And a big opening on Thursday saw the S&P 500 up over 30 points, the NASDAQ up over 150 points, and the bond market getting hit pretty good with yields rising on these massive spending plans. Apple's big upside beat really wasn't able to hold, and that caused the market to have some gyrations as it gave the whole gain up. And the market overall had some trouble holding as the NASDAQ did reverse. And overall, we saw a lot of fluctuations. S&P's up 35, fell to minus 12, and then closed up near the highs again. So just the most volatility we saw all week came on Thursday after all that news that poured out. Friday, the Eurozone GDP came out. How about they lost 0.6% annual rate? And that actually was a little better than they expected. They're nowhere near the recovery of the U.S., and they're way behind on their COVID recovery. So the stocks actually were pretty soft here on Friday. Apple moving down on some news out of Europe. Also that there's an antitrust suit being followed on non-competitive policies in their App Store. So Apple came under a little bit of pressure, and that kind of weighed on the market also. U.S. household income surge was massive, a record 21% for pickup in household income. Now, a lot of that is the rebound, and a lot of that is the fact that the U.S. is building a bigger and bigger dependency on Uncle Sam. Where would we be if the government wasn't handing out money? Well, how long can they do that? And how much detriment to our society is being created? Our analysis continues to show the stock market would be moving up into May and potentially June and make the high then for 2021. When I say that, I get the critics pouring out and telling me that I'm out of my mind because a lot of people pointing to 600 on the SPY. I mean, just crazy numbers that are being sent to me. And I think that the high for the year is just a matter of weeks away. I'm going to say more about that at the end of the show when I do the analysis on SPY, the S&P 500, in our 1 to 3 month view. Also coming up is a preview of a stock sector's ETF analysis video done by Arvi. And you don't want to miss this. I'm going to do a little tools for techs segment where I'm going to look at 5 important stocks that are giving sell warnings in tools for techs, gaps, and cycles. Really, I think, important analysis when you look at that. Here we are at midday right now, and the stock market, we're going to call it narrowly mixed for the week. Even with all of this big news pouring out, the stock market was not able to continue with any kind of strong gains. And here on Friday, it is chopping around to the downside with the S&P's down about 25 points. Overall for the week, the S&P 500 and the Russell, tiny little upside gains at this point. The NASDAQ and the Dow, small losses, so not all that much. I want to note the Dow Jones Transportations. Take a look at the weekly chart in there. How about like 14 straight weeks to the upside? Talk about extended. Bond market, 30 years, they lose about 1.5 points. 10-year yields gain about 8 basis points. And the reason for that is the Biden spending program and the massive borrowing and the huge increase of debt that is going to be coming. No matter what the Fed says and no matter how much they spin this, they're going to have to get on, behind the increases in rates and start talking about their taper and about when rates are going to go up. They don't want to do that because they don't want to upset the bubble that is going on right now. That the Fed has created over all of these years. Gold loses about $8 as the dollar had firmed. Silver really nowhere, up a few pennies. Very quiet week. There's a silver trade that we do like, and that is in our trade ideas for level 3 and 4. So if you are a level 3 and 4 member, do check that out. And the dollar, as I said, gains a tiny 0.2% on the week. Oil, with a big down day on Friday, right now down about $1.60, actually is still up about $1.35 on the week. And we have been positive on the energy market. And if you watch our Future Speak show, you will see in there what we're projecting on the upside for the energy market. And we do 24 different futures and index ETFs. On Wednesdays, some pretty deep analysis, so make sure you take a peek at that. All right, so that is the opening. I want to make sure that you go to the askSlim website and explore that. Subscribe to our website, become a member. We have a lot of ways that I'm going to talk about in just a few moments. If you're watching this on YouTube, do subscribe to the YouTube channel. Click that notification bell, and you'll be notified when we put up one of our many videos every single week. And make sure that you give this video a thumbs up. If you are using Twitter, follow us at askSlim on Twitter. We do post charts on there and comments a lot during the week. And for information on our memberships and specials, please do write Matt at askSlim.com. All right, one more thing here to note. If you want a great introduction to our services, do become a level 1 member. We have this incredible special going on where you're going to get our Slimulator momentum tracker with over 1,000 symbols on there with scanning and sorting. That's for longer term holders, position traders, and investors. Fantastic. Our algorithms built in there. You're going to get our weekly stock index report, our weekly ETF review, our new trader investor workbench where you can organize and prioritize and save and track your analysis that you do. And you'll also get the archive to the askSlim Market Week show, which is this show right now. And you'll be able to review in there, see our analysis and style. And you're going to get our live replays. That's usually around 70 minutes where we teach a ton live to our membership, which we do a couple times a month. And you're going to be getting those videos. Also, some special member videos. How about all of that? That unbelievable introduction for just $14.95 for a month. Sign up for 3 months for $30. That's $10 a month, for $30 for the quarter. How are you going to beat that? You're going to get great information and really get a feel for what we do here at askSlim. Great way to start out, especially if you're early in your trading career. Become an askSlim member, level 1 at this special. All right, so we're going to do a little preview in here. I'm going to bring in a special video, a short little video, a few minutes, and we're going to look at the stock sectors. Arvi did a great video for our members. That's level 2, 3, and 4, and we're going to give you a little taste of that right now.
Okay, so this is the XLF. For the XLF, we have a dominant weekly cycle, which is then broken up into these minor thirds that you see right here. And what we've done is we've traced out how the dominant money flows have formed over time in this pink line here, and how the minor money flow patterns have shaped out over time in these black lines here. And what you'll note is that these really have been very, very clear. What we've done is we have shifted this dominant cycle 1 bar to the left. Now, the rationale behind that is as follows. First, we had an intermediate term low that was due. The intermediate term low was due 322 to 517. We had this sell-off right here that formed a low right around the later part of March. When that happened, it really got on my radar that an intermediate term bottom may have formed given this forecasted weekly timing. And what I wanted to do is simply to wait to see how we moved off of that low. And what you'll see is we moved really quite sharply off of that low back to the upside. So that said that the intermediate term low formed on the week of, if I highlight it, 322, and we are now in a new intermediate term rising phase in the XLF, and overall in a very favorable pattern here. On the upside, we are looking for the XLF to get up to this intermediate term fib target zone from to 3808 to 3947. That's really what we're looking for on the upside, and this is a very nice pattern and really one of the best patterns that we are going to look at in this video. So this is the XBI. For the XBI, we just have one single cycle really in play here, but these really have been very clear over time. And this is in a pretty negative pattern. Why do I say that? Well, we had an intermediate term low due. The intermediate term low was due 1228 to 222. We formed the low right here on the week of 3-1, so it was a late low. Frequently, when you have a late low, it's due to the fact that there was a lot of selling pressure and the more dominant money flows had started to shift, and that is what happened here. And in those cases, you look for just modest rallies in rising phases and then to get quick failures, which is really what is going on here in the XBI. You can see there is a bear flag now forming here. Now, given the fact that we have this negative weekly momentum right here, we would look for this to turn back down on the downside into this next key intermediate term bottoming timing here. The next key low is due 628 to 823. I think this chart is a very important chart to keep on your radar and in focus. We've seen this overall rotation out of growth and into value, and that is really manifesting here in this negative cycle pattern in the XBI. We have been favoring the short side in the XBI, and overall the last trade idea that we did has played out well. We will be monitoring this in the coming weeks for one more short side trade idea, so keep that on your radar as well.
Thanks, Harvey, for that great work. Like I said, that is just a preview, a couple of the symbols that we do in our sector ETFs. So you're going to be able to get that whole video if you become a level 2, 3, or 4 member. So we want to bring you a little preview of that, and we have lots more coming up. I'm going to do something a little bit different in here, and I'm going to bring you a Tools for Techs. We do this for our members. Our Tools for Techs video segment has just a great selection of videos. There's over 80 videos in there that has really expanded. I'm going to do a short little one here because I think this is important on the messages for 5 stocks and how we do this analysis, and maybe even messages for the market. So we think that these 5 stocks are warning of a major top for them, and this may be the beginning of something that's happening as we see almost no good upside coming even after huge 87% of all stocks in the S&P 500 beating on earnings. The market really stalling on that, and if there's any little whiff of guidance that's a little bit softer or earnings that don't make estimates, the stocks are falling pretty hard. And we're going to show you how to put together some gaps and cycles as we do this analysis. So I'm going to switch over right now, and we're going to start out by looking at some charts. And this is the first charts we're going to look at, and this is Citrix Systems. This analysis that I'm going to show you is weekly and daily. And just so that you see what we're looking at here, we're looking at a 10-year weekly chart, a 2-year daily chart. And this is cycle analysis, but we're going to start out by looking at the gaps and then applying it. What happened in here, as the news came out about Citrix earnings, the stock had this big gap. Now, we're going to talk about the importance of gaps. The first thing I want to say is that I do not believe it is fruitful to look for gaps to get filled. The messages in gaps are much better, that they are important when there is a high volume, that there is going to be some continuation, that there's an important meaning on that gap, and you see this high volume right over here. We also look at momentum. You can see momentum basically was neutral, very choppy in here, and now has gone negative again. in Citrix. So as you can see in here, as we look at this big gap right over there. So the stock comes down from this level right about 145 and trades down here to about 122. And based on what we see in here, this is likely the start of something. Now I'm going to switch over to the weekly chart and to give you a little taste of the analysis. And if you just watched RV in that preview of ETFs, then you get a little sense for what we do here. We look for the money flows, the rhythms in the market that you can see right in here. And these are cycle brackets, which simply are guides to the rhythms in the market. What we look for is a somewhat close amount of distance between important lows. That's called this cyclical period or length. And you could see the bottom that came right over here, and the bottom that came here, and the bottom that came here. Very nice rhythms in there. Now, I want to note, in cycle theory, when you get a cycle that rallies very strongly and then gives up more than 78.6%, the odds are very high that it's going to fail in the next resistance zone. And we put that in there with what we call swing high, swing low analysis. And in this case, it's a sell zone because it got below the 78.6%. So you had this rejection go on in there. In fact, a number of them in that area, and then this big bad down week on Citrix earnings report. So if I put the side-by-side up right over here, you will see that what we got during this period, and there are cycle rhythms on the daily also, that it failed in this area here and then gave you the big downside gap. What that points to is coming down to about 110, that next support area, and that coming in the beginning of July. So you can see this would be a time frame where between now and the beginning of July, that's about 10 weeks time, that it's going to likely continue on the downside and rallies will fail. So here's your big downside gap right over here. It aligns with that weekly, and we are estimating that a cycle low is due soon. You'll get a rally into another sell zone right over here. We'll put that in once we get a good anchor point, and then down again and heading towards this $110 area. So that is a picture of a cycle analysis and adding in the information that comes out of a big downside gap. And we rate Citrix a sell based on this. Now, it was a sell anyway, but it's really confirmed that to us. Let's take a look at eBay. We're going to look at a total of 5 stocks that are giving us this similar information based on it being post earnings. And take a look here at eBay. We'll put up these last few cycles right in here, and you can see in here a similar occurrence. First of all, note the big double top in here. You will also note that it had been positive and we were getting bullish signals. This is the Slim Ribbon PO. This is only available to our level 4 members for the Thinkorswim platform, and I'll tell you a little bit more about that in a few minutes. But that uses this as our momentum indicator, and this being the signal indicator. Now that has turned negative right now. Here's your big downside gap on the earnings report. Of course, eBay did well in the stay-at-home environment and people ordering things, staying at home, and now that's all going to change as the guidance is not absolutely great in some of these. It's not enough to support these prices. When I switch over and look at the weekly chart right over here, you can see what has gone on is that this downturn that you see right over here is very early in this cycle rhythm. Note the low here, the low here, the low here. There's your beautiful cyclicality in there. And then this calls for a decline into somewhere around mid-June to around July 1st. Similar timing. And I want to note that we expect the stock market to do similar. Supports are coming in here about $52 down to the major 38, about $50. So we think this stock is a sell. Again, we'll look at the side by side and you will see the weekly and the daily, the big downside gap right in here, the likely attempted rebound somewhere in here, and a sell zone that will be created, and then the continued decline on the downside on both the weekly and daily. We rate this stock a sell. That is eBay. The next one is F5, FFIV. Again, we're going to start on the daily. You can see the big downside gap. Note that right over here before the earnings report, the stock had a reversal, like somebody knew right over there. Now you have the big downside gap. The shorter term pattern says maybe another week. In this case, we put in that sell zone. It might actually be a little bit lower and then down again. So our downside objective based on the weekly pattern is, let me just move this over and then I'll show you the side by side, is coming down here to break this support. Now the fact that it did, if it does, it confirms the major top. Again, you can see the double top. This calls for a decline into mid-June, early July, an attempted rally, and then further price deterioration out into September. We're looking for the stock to get down to potentially 168 to 153. In here where those big supports are, we rate F5 a sell when we look at that. Look at the pattern here as you have that double top. Look at the pattern here setting up the sell. So a rally right into this time frame takes you somewhere out into here and then moving down together here into the June time frame. F5, we believe it is a sell. The next one is NOW. And this stock is another one with a big downside gap. This we left the weekly resistance zone in here for you to see, and as it got up into there and now has that big downside gap also. When I look here at this pattern, this is a big downturn right over there. Now it's interesting, it gets down to the 78.6 here. You can see the cycle low here, the cycle low here, the rally, but because it got so deep into this cycle, we would expect it to fail in this zone, and it did. It points to a decline down over here to potentially 430. That's about 80 something points on the downside between now and August. We rate NOW a sell. That is ServiceNow, and ServiceNow is a stock that the analysts are beginning to downgrade, and you can see in here the earnings for 2021 getting downgraded. Take a look at that forward PE. Another stock that did really well during the COVID crisis and is just massively overpriced. And the slightest little hint that it's not going to do well in earnings, and you can see the big downside gap. We rate ServiceNow a sell. And the last one we're going to look at, but certainly not least, is Twitter. Twitter has a big downside gap that comes today on Friday as their earnings come out. Simply, they have a monetization failure. Essentially what's going on. They don't even know what their model is. They've been trying some changes. They've tried to compete with Clubhouse, which is that great audio kind of meeting place, and they have not been able to really pull that off yet. And now this is really key. Not only do we have a gap down, but we break a key support here level. That says that the next rally, which is due to start in a few days, a rebound, will set up a sell and then moving down again. We believe this failure in Twitter is going to send it down fairly sharply in here. And our downside targets, when you look at this, are down over here. This is about $50 at the major 38, and this support zone over here below $43. We think that there is potential for a very large decline in here, and this move to 80 was just a lot of hype and a lot of hope. See that big reversal right in there, and then the cycle low that was due right there, perfect. You can see that. The rally that fails breaks the support right over here. It points to continued downside in here and a lot of disappointment in Twitter, and we rate Twitter as a sell. Momentum, as you can see, right over here is turning negative right there, and overall this is a very bad pattern. Those of you that are looking for a fill of the gap by it moving up to about $63, it's possible. I certainly wouldn't play for that. I think that the risks are enormous in Twitter on the downside. And that is a look at the 5 stocks that are showing you gaps and cycles and the important information. But I have a bonus for you. Back some time ago, we did a little piece on gap reverse. What a gap reverse is, or invisible gap, is when a stock trades up based on some good news, usually, probably sometimes makes a higher high or a new high, and then reverses and gives the whole gain up. Sometimes it engulfs the previous day, sometimes it just gets through part of it. There are five important gap reverses that came out this week. First of all, Apple. I think Apple, on what should have been great news, on great earnings, on great sales on iPhones, and increase in buyback, that stock acted very poorly, and then it comes out Friday with the antitrust suit from Europe. We think that stock is done and will begin to trade its way to the downside. So Apple, gap reverse, and 4 more stocks with gap reverse that are giving warnings, even though they've been decent patterns. Caterpillar, CAT, Las Vegas Sands, LVS, Advanced Micro Devices, AMD, and Xilinx, XLNX. Take a look at those daily charts. You will see gap reverse sometime this week and stocks that look like they have made peaks. So between those 5 stocks with big warnings of tops that we showed you and the 5s that have these gap reverses, there are warnings coming out that the stock market is, as Paul would say, frothy. And the advances that we saw have baked in a lot of good earnings, and I think that sets up a market that is moving towards an important peak for the year. That's Tools for Tech's Gaps and Cycles and 5 bonus stocks with gap reverse. And I've got a lot more to tell you. All right, so what we're going to look at now is our Level 4 membership special, a 35% discount. We want our advanced, active, skilled traders and investors to be able to learn from us as we give a lot of support to Level 4 members. If you're a Level 4 member, you're going to get our charts. We do the cycle analysis, as you see, and you need to be a Think or Swim, TD Ameritrade account holder to be able to get the information that we put out with all of our cycle analysis and annotations. And if you do become that, a Level 4 member, you're going to get support from me and Arvi and Matt, a fantastic team of analysts and coaches. And what we also give you as a Level 4 member are custom chart requests. That, in other words, twice a week, you can just ask us for any symbol, and we will put all of the cycle analysis and annotation on there for you. In order to do that, you need to become a TDA member. If you are not, open up a TDA account. All you have to do is go to the askSlim website right over here, as you can see, and I'm going to click the little right arrow here and move the carousel, and then you just go to the page that says Think or Swim by TD Ameritrade. Click on that, and it's going to take you to our referral link. We get credit for that if you sign up for an account at TD Ameritrade, and you're going to get all of the support that I'm talking about. Plus, you're going to get everything in Level 3. Our new trade ideas, which there's 1 or 2 ideas every single day. Arvi runs this, does an incredible job at this. Great results. There's about of the trade ideas we put out, in order to get for it to be a positive trade idea, it has to follow our analysis. It has to move into the area, the zone that we put in there for entry, and it then has to move into our target zone. So we're really strict about that, and that's over 62%. That's almost 2 to 1 that give you that. And on top of that, directional decisions run about 70% to put you on the right side of the individual trade. It's fantastic. It's an analysis built around our cycle projections, momentum, key support, resistance, and for holding periods generally around 3 weeks or a little bit more. So it's for swing traders, option traders, and even occasionally we put in a little shorter term trade, and we let you know when we do that. Plus, you're going to get our Slimulator ranking system. This has our built-in algorithms in there for the 84 best traded symbols. You'll be able to sort, scan. It's fantastic. You can take a look at that. If you ask for a little walkthrough from Matt, say more about that. Plus, you're going to get everything in level 2. Our SIR, that's our stock index daily report. You're going to get our live stream, which is 15-minute charts on the S&P 500, NASDAQ, and the Russell. Unbelievable for day traders. You want to know the right direction, the right support, the right resistance, and the zone that it will accelerate in or likely to. That's the stock index report. You don't need a special platform for that one. Plus, you'll get 500 videos for traders and investors, and our new library, Table of Confidence and Search. You're going to see just a fantastic way to do research on things that I have taught. Done 500 videos plus RV now doing videos, and you're going to get Future Speak and Market Week Minutes. You'll be able to get the bullet points to what we say and find the exact spot on the video, plus our notes that we put in there on everything, plus everything in level 1. The SIR weekly report, the weekly ETF report, the momentum tracker, which is 1,000 different symbols for investors and position traders. Absolutely fantastic. All of that, level 4 membership trial, sign up now. 35% discount for new members. Or if you're a level 3 or level 1 or 2 and you want to upgrade, you can let Matt know. Write to Matt for the special discount link, or you can go to the top of the front page at askSlim, and that link is right there. Just click on the green button. You want to know more information, write Matt at askSlim.com. He'll send you everything you want to know. You're going to get everything in levels 1, 2, 3, and 4, all of the support that we can give you. 3-month special, $303.75. That's only $101.25 a month versus the regular $159 a month. So you're going to save 35% on this unbelievable offer that we're giving with all the support that we offer. Don't wait. Go right now. Sign up. It's going to be a fantastic way for you to really improve what's going on as far as your knowledge building in the markets and your overall trading decisions. Write Matt at askSlim.com or go to the front of our web page, top of the front page, and click on that special link, and you'll be really happy you did. And thanks for listening to that. All right, last part of the show in here, we're going to look at the S&P 500 1 to 3 month view for the stock market. All along, we've been talking about the market moving up into the May-June period. The market has done that. Our upside projections at the beginning of the year have been far surpassed. I mean, hugely so. If you look back at our New Year's show, but the timing is good, and we've been talking about the upside momentum in the markets and how the directional forces have been pushing it up, and that has been spot on. Now we're looking for changes, and if you caught the piece that we did on gaps and cycles and gaps, we're giving you examples of why we think the market has come about as far as it can. Our upside projection on the S&P 500 at the extreme was 423, and we almost got to that. I'm just going to move this over to SPY from Twitter and blow this up right here. And there you can see the cyclical patterns that we have been looking at. So I'm just going to look at these last 3.5 cycle patterns that we see in here. And I want you to note that in periods when the market moves down in the minor middle cycle, you get either a tiny little decline, which you had right here in a very bullish condition, or you get some modest declines, as you see right over here on that one. Just a little modest declining period right out over here, and now we're looking for a little modest declining period right over here. And that's this minor cycle. So if we're right about the pattern in here and the fact that this period in this May-June and the pricing area around 423 right there is about going to be the peak. Now there's an outside area here, 430 to 432. We think that could be achieved in the test of this area, or a little bit better, out here in June, potentially mid-June to late June right in there. Right now, what we're looking for, now this is really a 1 to 3 month view, but you can see our view here out into August, is that this is a very risky time frame. So right now, what we're looking for is the peaking going on right in here, and then a decline. These prices right over there, that's about 409. This is the intermediate 23.6%. Under a very positive condition, which we have with strong momentum going on, it would be reasonable for it to come down and stop there in this decline that we see coming in May. If you look right over here, this is about 401, and that is probably the worst we see between now and this decline into the third week or so of May. So we're looking for approximately 2.5 to 4 weeks of a pullback in here. We'll just call it 410 down to about 400 is what we're looking for, which isn't really a very big decline. It's about 170 to 200 and something points, 3-4% potentially down in here in this period into May, and then another move up here into this June time frame. So what we're looking at is this minor cycle and this minor cycle. Now there is a major dominant cycle that is pushing on the downside that goes way out over here into 2022, and if this starts to roll over as we believe, it will begin to give us messages about this big top that we see coming in the market. That's a lot more than I wanted to really talk about in a 1 to 3 month view, but that's where the risks are coming in, and part of our bigger picture analysis that we see a topping in the market here and a struggle for the stock market in the second half of the year. So right now, looking in this 1 to 3 months, a decline into sometime late May, a rally into sometime late June, and then getting into this July-August period of some major risk in there that you could see that we expected declines to be somewhere in the area of 10% or maybe greater than that, in what we think is going to be a first leg on the downside to a lot of trouble for this stock market going further out. There's a lot here that has to happen, and we think that if we get the decline in here, then this is what we call the proof of life period, where the next rally has to show us it has a lot of strength and that it's really good. And we'll see. We'll wait to see that. In the meantime, we really believe that in the next number of days, we're going to be setting a top in here that is likely temporary, and this decline coming through the last part of May of some just a small percentage down to this level about 409, this level about 400, 401. And I think that we're going to see some stocks give a lot of ground in that period as we're seeing a lot of breakdowns going on. If you watch the part of the show where I showed you the cycles and gaps, you get some idea of what we're talking about. So market, we think, making a peak right now, and soon to be giving some serious ground on the downside. That would probably, let's just target on the S&P 500 about 170 to 200 points on the downside, I think, coming up fairly soon. That is a look at the S&P 500 for our 1 to 3 month view. I want to make sure that you do go to our website, do subscribe to our website, become a member, please. If you're on YouTube, subscribe to our channel, click the notification bell, and do like this video. Give it a thumbs up. Follow us on Twitter at askSlim. And for all of our membership info, if you didn't see that special we have on Level 4, go back and look at it. Just a fantastic, massive amount of information and education that we share with you. And write Matt at askSlim.com for that membership info. I want you to be so unbelievably careful because it is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been